Okay, let's get this show on the road. All right, let's check out what's going on. Dollar is down across the board, and the Aussie is actually the biggest winner today. Aussie is doing fantastic, but I haven't seen any Aussie news. Maybe the odds of Albanese winning went way up. Yeah, I'm gonna check my email and see maybe if I got any analysis. I mean, there was a debate. No, that's not a debate. That's just a speech. China Finance Ministry to impose additional tariffs on U.S. goods. 10th, 84% tariff on U.S. goods from China. All right. Go ahead and mute that. That's just emails. More people talking about tariffs. Oh yeah, let me go ahead and make sure that the chat is working. Okay. All right. Stream should be good now. On the chat side of things. All right. The things are still generally risk on. Oh, wow. Look at that. Aussie got hit. Wonder what that's all about. The dollar didn't rebound. Yeah, I'm not too sure what's going on here on the Aussie side of things. Yeah, it just dumped in the last 5 minutes. Really no clue what this is all about. We're not getting anything in the... I mean, we have this in the squawk here, right? So did this move it? Seems like it. That's probably it, but that's not necessarily new information. Damn. That was fast. Pretty much reversed this entire move here. Wow, it already gave back half of the daily gains it made. Wonder if it'll hold up. But these are tariffs on the United States, so... I don't necessarily know why this would hurt the Aussie more than it would the US dollar, so I'm actually going to take a shot here. Might be a dumb decision, but I kind of don't see the rationale here. Why US tariffs from China to the United States would hurt it, because that'd actually induce more trade with one of... I mean, the Australians do way more trade with the United States from what I understand. Or they have a larger surplus, deficit. Oh, man. But yeah, I could understand why this would move US dollar. I could see why this would move bonds. I can see why this would move the S&P. Who knows, maybe this is supposed to increase US yields. And that's why. In that case, that does make sense. Give it a minute, you know? See how it plays out. Not nice to see China and the US getting into a spitting match here. All right. Sometime in about 2 or 3 hours, I really would prefer to be short. But short term and tactically, based on this information here and this dump based off that news, I almost want to say it might be a fat finger, but who really knows? Just gotta watch it close. We can check out a couple other assets though. Oh, Kiwi looks like it's in the same boat. Euro looks like, let's hide these drawings for now. It's just covering the chart. Euro dollar looks like it's in a similar position Looks good. All right. DXY is still falling. So I don't know, man. You'd think that would end up hurting US growth expectations, or at least confirming the negative US growth expectations, with the China tariffs coming on, so. Oh, man. All out of crackers. Yeah, nothing too crazy. Yeah, good kitty cat. Okay, let's go ahead and check out Bitcoin. Oh, Bitcoin got hit. Bitcoin got hit on that news, which is kind of interesting. Every risk on asset got hit. How about the equity indices? Yeah, S&P didn't like this China news. NASDAQ, Dow, nobody liked it. Now, question is at least in my camp, is this going to make for a stronger US dollar? I'm not so sure. Depends on how much it moves yields, would be my question. So, Nikkei down, UK down, Euro area, France, Germany. Germany seems to be getting a nice little kick out of this already. What about Australia? Australia's actually holding up. Their equities market's holding up well. New Zealand also pretty flat the last couple of days, except for this day here, right? So net, nothing crazy. Let's check out gold. Gold is nuts, man. Gold's been doing real good today. 2%. 2% up on gold. Whoa. Oil fell even more since the last time I looked at it. I was checking it out here around 58, and now we went 55.50. Oh man. Last time we checked it out, it seems like break-even price for a lot of these oil producers in the United States is around 55 Brent, 50 WTI. And, well, here's light crude. We're at 55. Yeah. What's the pre-market on equities? Not crazy. The volatility seems to be dying off a bit here. Yeah, not as crazy as the last few days here. A bit more stable. A bit more stable. And nothing really to write home about here on the Aussie side of things. So as far as the trades go, that I was taking, right? This trade, I hopped out somewhere around here before this rise up. So, you know, I'm kind of upset because that would have at least brought these drawdowns away, but this one was sized well enough that exiting this one, a US dollar CAD and a euro trade, it did well. It did okay. I didn't lose money, thankfully. Once I closed all the positions, the net was positive. The biggest loser actually was that USD CAD that I had on. I had this USD CAD short on and I hopped out also around here. And now the thing spiked up because of China news. You can't predict these things. You just can't. So you're literally watching me work with this in real time. And the way I worked with it is by taking a shot long. And I'm happy I took the shot. I would have been much happier, you know, closing this position down here, because that was like 100 some odd pips. Yeah, 110, 120-ish. Call it between 85 to 110, depending on what time I got out. So, you know, to take it only for effectively 40. That wasn't too hot, but you know, it's not like I was like, oh man, getting out of these trades was such a good idea once I saw these rises. And now we have the kibosh being put on here by the Chinese on this and sending it back down. I'm like, okay, either this trend continues going at this point with these risk on assets. And 2 streams ago, yesterday stream, not the stream I did last night on Japan. But let me go ahead and get the write up here. I got a little thesis going in the trade group here. Yeah. So there's a bit of a rebound risk. I pointed it out in a couple streams ago, but I kind of wrote it out, and this is net what I said. There are very few major macroeconomic events over the next 2 weeks. Most of the major events are going to be central bank related, and most of those are going to be around central banks updating their expectations more or less in line with what everyone is expecting, what all the major institutions are expecting. No major surprises are expected. Major economic impact from US tariffs don't seem like they'll be felt for a few months at a minimum. Many months, like almost a year out potentially, at best. Unless world leaders decide to rock the boat and instigate a trade war with the US further, which is literally the scenario that's going on right here, right now with China. Instead of coming to the table for negotiations, that would shock markets lower, right? Reverse of that last point is also true. Negotiations and piecemeal agreements to reduce tariffs / trade barriers step by step as negotiations take place would benefit markets. Hello, Lucky. We'll check out gold in just a sec. I got like one more point here. And then even if the negotiations don't take place for those tariff-related things to improve market sentiment, so long nobody rocks the boat in a major fashion, again, China's rocking the boat right now, some lower volatility can be in the store ahead of us and induce a rebound / dead cat bounce, depending on how you interpret. All right, so with that in mind, let's go ahead, Lucky, and check out gold. I did bring up gold just a little earlier here on the stream when we were going through the watch lists. Oh man, look at that. Gold jumped 10 points. $10. It went ahead and made a new high. Man, what a great rebound day. It's up 2.5% on the day. What a great day for gold. Wow. Seriously, yeah. What is the next level? I mean, we can look at the ranges. Oh my god. Yeah, there you go. There's your peak in your probability distribution right there, right at the lows. So let's see here. If that is the low for the week, yeah, we only have one dot there, so we gotta increase the size of these timing dot ranges. Wow. We have very little data of lows that are made this early in the month, this far down. So I nominally would just be careful of reaching the high 3100s at this point. I'd be careful of reaching the high 3100s. Way more people are now going to be jumping and screaming that there's going to be a V-shaped recovery. Especially if we recover after this China news. If markets recover and are up positively after the China news that just happened, there's going to be jumps and cheers and cries for a V-shaped recovery. Especially if those negotiations actually start occurring over the next week or so. You could see the US dollar weaken a lot more material. Again, I just got to keep an eye on Aussie because we got to trade on that one. However, I am definitely going to keep an eye out on the news here. We'll have Financial Juice Squawk open in case they say anything. So if you do hear someone else speak, that's going to be Financial Juice.
And China's Premier Li says we should be aware external shocks to China's economic stabilization create some pressures.
I am curious how this is moving the spreads. Huh. I mean, net spreads are still negative. But the short-term and intermediate-term yields have started to flip a bit more positively. So it's mostly long-term yield spreads that are making the difference here. Currently, that is. Currently. Now, if you go to a daily, these yield spreads are way, way more negative. Which is what gives me the more bearish bias, but I'd rather wait for kind of more or less the middle of the New York session to come through. Because again, if we see a rebound in equities, global equity market indices.
China's Premier Li says we are prepared to deal with uncertainties.
All right. Yeah. If there is a rebound from the equity markets off the China news, well, actually, I would think Apple would probably get hit by that quite a bit, wouldn't they? Maybe. All right. Is my internet still good here? What's going on in TradingView?
China's Premier League says we need to implement more proactive macroeconomic policies.
All right. Kiwi actually looks like it's faring better. Yield spreads went neutral. On the daily, though, still not looking great. Still not looking great. Yeesh. Yeah, those yield spreads are not looking any better here on Euro.
China's Premier League says we will roll out new policies in a timely manner according to the situation's needs.
Let's see here.
Expanding domestic demand will be a long-term strategy.
Sometime in the next 3-4 hours, most of the tops for the trading day come in. And on bearish days, yeah, it's roughly about the same time, just a little bit more skewed to the 2 or 3 hour mark there. Yeah. So we'll see how markets react off the China news.
China's
And if
Premier League says we should stimulate the vitality of business entities.
Yeah. If markets rebound well, specifically global equity markets rebound well after this China news, if we, for example, end the day green today off the China news, I feel a little bit more. There's going to be a bit more hope in the market. You're going to start to see people say, "Oh man, I really wonder if maybe we're going to have a V-shaped recovery all of a sudden." And that might be a fair call. But be realistic. We have to see actual developments with the tariff negotiations with the United States and non-tariff trade negotiations go well, and that could take months. But the fact that the negotiations are starting, apparently, according to Trump and a few other major countries, that the negotiations are initiating, that negotiation teams are being sent to the United States, that makes me feel more okay, frankly, with being risk on. Again, the thesis I laid out, like, explicitly covers this. I'm just going to go through it again. There are, over the next 2 weeks, few major macroeconomic events that are probably going to be surprising markets. So the significance of the macroeconomic events right now are going to be more or less, I think, put on the back burner compared to the importance of the geopolitical things, the negotiations. So specifically, if there's a world leader who rocks the boat, that is, they instigate trade wars and do stuff like what China just did here. So China's rocking the boat. It sent the markets down. And now markets have to assess, okay, is this a big enough hit to justify lower prices? And that's what we're going to be finding out here over the next hour or so. Next couple of hours. That's what we're going to be figuring out here. And based off the initial reaction, that doesn't seem to be the case. Because if it was, we'd probably be making a new low like on the day. Right now, we'd be going a lot lower. Like, if China said, "Oh, we're gonna do instead of 84% tariffs," which is what they said. "Oh, we're gonna do 84% tariffs." Well, the U.S. tariffs are 104%. But if China then went out and said, "We're gonna do 120% tariffs on the United States," at that point, trade war. It's a trade war at that point. The one-upsmanship just keeps getting worse and worse. At that point, it's a trade war. At that point, the boat is almost capsizing. It's not just rocking. And you're going to end up with way more volatile markets. So long there's no more boat rocking by these world leaders as far as trade and trade barrier policies with the United States are concerned, that should reduce volatility going forward. Which, alongside the idea that we're going to get some kind of piecemeal agreements and negotiations started, that'll also fare well. That'll also sound really, really good, frankly, for risk-on assets, for markets. And even if those negotiations don't take place, so long no more major trade war, rocking the boat sort of events occur, that also would net reduce the volatility. It might not necessarily be a positive drift in the markets if that's the only case, if there's no developments whatsoever. But at least the volatility would reduce and people would be a little more, just they'd be starting to tiptoe back into the markets rather than, oh, Trump announces and some like 3 or 4 other countries announce, oh, we made a great trade deal and da 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 da. And we've begun step 1 of our negotiations with such and such a country and this other country and that other country. And we've already got this and that concession. And we're going to do this and that to increase military support and funding and help them out with where they need. So this is really we gotta actually see these negotiations come through and actually do some good, and less of what China is currently doing. Right. Let's turn Financial Juice back on. Yep, everyone's talking about China right now. Even with this happening, try calling your lender and asking if you can repay in something other than US dollars. Assuming your loan is denominated in dollars. That's not going to happen. It's very risky to assume. We would see a Liz Truss style dynamic play out in the US. Steno. Of note, given the escalation of both sides, China, US, and bond and swap volatility overnight. Interesting that markets haven't made new lows yet versus Sunday night with every excuse to do so. May signal markets still hopeful, pragmatism.
Christoph Amann becomes new vice president of S&B Bank Council.
Gotcha. May signal markets still hopeful, pragmatism will prevail in the end. If so, markets could rip massively higher on confirmation. Whether that is so, to BD, of course, and downside risks remain in the meantime. This is Northman trader, financial market strategist, macro and technical analysis, keeping it real. He's got 500,000 followers on X. And literally, I posted my thesis yesterday morning here on the US West Coast. And this guy's literally pointing out the exact same idea that I'm having here. Yeah, upside risks. And it depends on how equity markets perform here. Either new lows get made, or these lows here are defended. If these lows here are defended, I mean, I'm in the same boat as that guy. Sven Henrich. Same boat as that guy. I was 2 paces off desk to lunch when the China headline crossed. Not today, sir. Yeah, so we'll see. Well, if you want, Lucky, if you want Wayne's Pivots Pro, you go into the description, you go to the WAP store, and you buy it. It gives you lifetime access. So they're looking at high yield corporate bonds and senior loans. They're saying that capital markets stress created by the administration's trade war could blow up. I mean, we'll see. Maybe that's just another reason for the Fed to cut. As that guy said, Fed put. Okay. We got another Panama Canal thing here out of Hegseth.
Panama and the United States, less secure, less prosperous, and less sovereign. And as President Donald Trump has pointed out, that situation is not acceptable. We are grateful to President Molino, Minister Abrego, and your teams, along with the Panama Canal Authority, for responding to these threats and safeguarding the canal. President Molino's decision to withdraw from the Belt and Road Initiative reflects his government's clear understanding of China and the threat it poses. I want to be very clear. China did not build this canal. China does not operate this canal. And China will not weaponize this canal. Together with Panama in the lead, we will keep the canal secure and available for all nations through the deterrent power of the strongest, most effective, and most lethal fighting force in the world.
Alrighty. This guy says oil WTI is going to print 49 in May. Besant says the 84% retaliatory tariffs by China are unfortunate. We need to unmute that one. There we go. All right, we got Financial Juice back on.
Says China needs to punish people exporting fentanyl precursors to the US.
Scariest part of the day is waking up and logging in the Bloomberg. And all the red showing up. Everything sold but gold. Yeah, sorry, Australia, but the spreads aren't looking constructive. Guess what? We could have seen a move in the exact opposite direction if we had any deal news come out of China.
China files new WTO complaint against further US tariff measures and says Chinese mission to the World Trade Organization.
Looks like China
Besant says
doesn't want to deal with the US.
South Korea and India also want to talk. UK 2 to 10-year yield spread jumps 18 basis points to the steepest since 2018.
Wow. Yeah, pound ain't holding up. Spreads are a bit more positive there.
And Besant says China needs to rebalance towards more consumption.
Yeah, S&P ain't holding in there. Yeah, so we're currently watching the market reaction.
Besant says China should not try to devalue their way out of this.
Yeah, we're currently watching the Chinese reaction, the market reaction to these Chinese tariffs getting put on the market. In the United States,
Besant says China should come to the table.
Yep. 84% tariffs. I mean, I'm not too sure if the markets will actually rebound off this today. It doesn't seem so hot. You can see how Apple's responded to that tariff announcement. How's Nvidia holding up? Ooh, Nvidia
Besant,
looks
when
like it's
asked
doing a
about
bit
removing
worse.
Chinese stocks from US exchanges, says everything's on the table.
How's Amazon doing? Ooh, Amazon's doing even worse.
And Besant says that will be Trump's decision.
Doing pretty bad pre-market here, man. Let's check out the yen. And the yen just keeps going low. The yen keeps getting stronger and stronger against the dollar here. Yeah, yen, Swissy are doing phenomenally. Biggest loser right now is the US dollar. At least according to the heat map here. Apparently the euro is holding up. Yeah, euro's holding up. That Kiwi's actually holding up so far. Again, the big thing is we're not seeing huge dumps. At least not in the currency markets here. Aussie sure could be doing a little better. We had a jump here in dollar strength on the CAD side. Nothing too crazy. Yeah,
And US Treasury Secretary Besant says we are going to do debt ceiling through reconciliation.
Mm-hmm. Let's see this. All right, from Bloomberg. Fear of next big basis trade unwind stoked by U.S. yield surge. All right, 10-year yields
EU
jumping.
Trade chief discussed parameters to lower tariffs with the U.S.
Oh. Aussie just had a jump. Some market participants attribute the move to basis trade deleveraging, which can cause yields to surge, while others point to profit taking ahead of new treasury supply, expecting of fewer Federal Reserve interest rate cuts or concerns over the impacts of Trump's tariffs. The situation is reminiscent of the 2020 pandemic when widespread deleveraging sparked blowups of the popular hedge fund strategy, and regulators are watching the market closely, considering measures to prevent a repeat of the crisis. All right, so everyone's got their eye on that right now.
EU Sefcovic spoke with Lutnick and Greer on trade Tuesday.
let's see here. I think today and tomorrow stocks can rally strongly, with small caps being the strongest. Another guy who's putting their money down on that same theory. Kinda interesting. Kinda interesting to see a few guys come through and point that out. That guy's got 250,000 followers. Sheesh. Or 750,000 followers. ECB scores the highest in a new measure of central bank independence. All right.
EU Treasury Secretary Bessent.
Yeah, what did he say?
US Treasury Secretary Bessent says, I think nothing systemic about deleveraging in the bond market.
Oh, EU
He says, I expect
chief
the bond
discussed
market to
parameters
calm
for-
down.
That's actually good news. So we got some bad news with China and some good news on the EU side. If recent disruption in the US Treasury market continues, we see no other option for the Fed but to step in with emergency purchases of US Treasuries. This would be very similar to the Bank of England intervention following the gilt crisis of 2022. Wow. I think it's that serious. I mean, in that scenario, you probably want to be long the US dollar. And then trail that stop. Because as soon as there is intervention, right, when regulators step in to send those yields back down.
Bessent says deregulation should let banks buy more treasuries.
I think banks should allow banks to buy more treasuries, all right? I think nothing systemic about deleveraging in the bond market. Yeah, deregulation should let banks buy more treasuries. And not the worst idea. Oh, we actually have a clip here. Bessent speaking.
Maria, I think it's unfortunate that the Chinese actually don't want to come and negotiate because they are the worst offenders in the international trading system. They have the most imbalanced economy in the history of the modern world. And I can tell you that this escalation is a loser for them.
Bessent says
That
the US has
they
a strong
have some very
dollar
smart,
policy.
the economists, the academicians, technocrats within their bureaucracy, and they would be telling the leadership that we do not have the edge here. They are the surplus country, that their exports to the U.S. are 5 times our exports to China. So they can raise their tariffs, but so what? Maria, I think it's unfortunate.
So what? Oh my god. Bessent literally, oh my god, when we got that rumor print down the squawk talking about how Trump is just saying, I don't give a fuck, Bessent is also now in that camp of, I don't give a fuck. So what? Oh my god. Oh man. That is nutty. That's pretty nutty.
Bessent says strong yen is natural.
Strong yen is natural. All right, we'll see a stronger yen. With regards to comments made by Governor Holzman, the ECB states the governing council. What? That's a 2020 print. That was COVID. Tariff turmoil hits Wall Street. 604 S&P 500 stocks see price target cuts versus just 131 upgrades for the past 7 days. Win SPR. Oh man. Yeah. Yeah, all the Besant stuff is coming down the squaw column there. 30-year mortgages back above 7%. Wow. Oh, Trump just posted, this is a great time to move your company to the United States of America, like Apple and so many others in record numbers are doing. Zero tariffs and almost immediate electrical energy hookups and approvals, no environmental delays. Don't wait, do it now. Chunks. 69 for 20% hit it. Crisis is not a crisis until gold and Bitcoin shit the bed. I don't disagree with that statement too much. Mag 7, now the Lag 7, are down 30% from their peak max drawdown. Oh, that's Lazan. Wow. What a dip. They'll probably go down a bit further, to be frank. The basis trade in treasuries is just a highly levered carry trade. Carry trades do well when vol is low, but blow up when volatility spikes. That's what happened in March of 2020 when COVID hit, and maybe what's happening now. This wasn't a financial plumbing issue in 2020, and it isn't now. All right, Robin. Salient observations. Bloomberg, a popular hedge fund bet on treasuries outperforming interest rate swaps, is unraveling. Banks are selling bonds to raise cash to meet clients' liquidity needs and adding swaps, pushing swap rates far below yields. Yeesh. Rate cut odds are probably going to go through the roof. And that's French. Let's translate that. Measures to be taken following the report of a commissioned inquiry into the failures of public policies on child protection, customs duties, internal pollutants, PFAS. All right. Issue du jour's issue du jour, transshipment. What China goods are competitive in America at 54/79% tariffs, but not at 104% few? So what China goods will actually face the much higher tariff? Very few. Unless customs gets far more resources to identify true sources of goods, not what's stamped on the box. And there's Besant with his statement, right, on deleveraging. Let's see here. What's George saying? Could everyone stop? Think about this. 100% tariffs.
Secured overnight financing rate 4.4% April 8th versus 4.33% April.
All good. 100% tariff is imposing a VAT like tax upon USA of about 2% of GDP. It simply is not going to happen. Logistics alone make it impossible. China bemused watching US punch itself over and over in its own US face. Well, threatening to now. I don't know. If proposed reciprocal tariffs from last week stay in place, average effective tariff rate will rise sharply for much of the country, per Richmond Fed. Hey, Las Vegas looks A-okay. Average tariff level for where I'm at looks A-okay. But most of the country here, especially in the Rust Belt, looks like it's going to get tariffed. And they'll notice it. Or if you live in some of the richer places of California. Or what is that? Kansas? That's Oklahoma. Texas. Yeah, Texas. Oklahoma. Kansas. Yeah. All right, here's another clip from Percent.
We have opened this process of negotiations country by country. It's going to be a bespoke, tailored process for each country. And as we strike these trade deals, I think that we will see greater and greater certainty. We have a delegation from Vietnam in. I was at the ambassador's residence, the Japanese ambassador's residence here in D.C. for the Cherry Blossom Festival last night, which was fantastic. And a Japanese delegation will be coming soon, South Korea, India, the UK. So I think we are going to see a rapid succession of these deals that will give CEOs greater certainty. But I think nothing gives greater certainty than getting this tax bill done. We have opened this.
All right. Hope. Guys. Besant says the investment strategy is hope. Honestly, I wouldn't try and bet against the Trump admin or all these countries from actually getting deals done. I wouldn't want to bet against that. Because if that is the case, then yeah, you'll see a more V-shaped recovery if over the next 2 weeks we do get at least some kind of piecemeal agreements on those negotiations. Oh, I saw something on implied volatility there. Implied volatility is up everywhere. Treasuries and the S&P. Wow. Let's go check out the VIX. VIX is rising up again. Wow. Holy moly. VIX is just ripping the faces off of people who made lower volatility bets over here off the China news today. Looks like Euro is recovering there. The CAD is recovering. Pound got hit pretty hard, but right now it's green on the hour. New Zealand's doing all right. Aussie is doing all right. It's technically faring a little better. At least better than the pound. The euro is doing really well right now. All right, and the yen just keeps getting stronger here. Yen is just continuing to get stronger. So I guess we'll see if this flip that I made on the long side. Oh yeah, we got to do this. So this was a winner. And this one was a loser. I think it was about the same price. And you can see the offset there. And this one's still open. And then this one was a winner. That one was a loser. Oh. Double click on that one. Winner. Oh. For some reason, save as. Save. Yes. Let's head back to that Aussie chat one. Is that? Yeah. Winner. And then we had one more on USD CAD. That one was a loser. What? Don't know why it's flipping. And that was down to there. I have to set these more precisely after the stream, look at my account and find the exact numbers. But all this loser and this loser, well, these definitely cancel each other out. Well, like I said earlier on in the stream, I got hit the hardest on this dollar CAD, but even the profits from this Aussie offset that, so I was a little bit in profits, like 10, 20 pips net in profit, so it was okay. But now we'll see if we actually get a recovery here even after this China news. Because if we get a recovery after this China news, hope will become a strategy for some people. Especially if we do get any kind of news over the next 48, 72 hours regarding trade-related stuff. And it, frankly, is now more likely over this next weekend that we do get positive developments on trade deals and trade negotiations. Let's go ahead and check out the equities. Well, so far it's not crashing. And I'm in line with that post that we read saying, hey, it's kind of surprising how we didn't make new lows, which is exactly what I said before we read that post. Dollar hits lowest since October 2nd last year versus the yen. Fed Dally says we have time and space to deliberate next moves. Almost an open statement suggesting that the administration should weaken the dollar against every country running a trade surplus with the US. No surprises here, but it's becoming increasingly clear that subsequently substantially weakening the dollar is turning into a measure rather than a goal. Yeah, the vibes on this app today is just people losing their heads, right? Don't lose your head. What's that Queen song? I don't think I can play it. Right, copyright and all that. Donald Trump Jr. just replaced
tariffs
this.
in China are not enough. I'm advocating for 104% tariffs in China are not enough. I'm advocating 400%. I do business in China. They don't play by the rules. They've been in the WTO for decades. They have never abided by any of the rules they agreed to when they came in for decades. They cheat, they steal IP. I can't litigate in their courts. They take product, technology, they steal it, they manufacture it, sell it back here. Never has an administration. 400% tariffs? What would that look like? Xi on an airplane to Washington to level the playing field. It's just not about tariffs anymore. Nobody has taken on China yet, not the Europeans, no administration for decades. As someone who actually does business there, I've had enough. I speak for millions of Americans who have IP that have been stolen by the Chinese. I have nothing against the Chinese people. They brought great literacy, art, and tech to the world. The government cheats and steals, and finally, an administration, you may not like Trump, you may not like his style or his rhetoric, finally, an administration that puts up and says enough. 400% tariffs tomorrow morning. He'll tell you why. Xi can only stay the supreme leader if people are employed. If we wipe out any business there, because we are still 39% of all consumables on Earth and 25% of the world's GDP, America is the #1 economy on Earth with all the cards. We will not have that forever. It's time to squeeze Chinese heads into the wall now.
Well,
I'm
hold
not
on
talking
a
about
second,
tariffs
Kevin.
on
Well, I hear you, but hold on. If we're talking about people,
Squeeze
the average consumer,
Chinese heads
not
into the wall
necessarily
now is
the
a
head
pretty strong
honchos of
statement
businesses all
there.
across the globe, can they withstand the pressure of that sort of tax on the goods?
It's short-lived. There will be.
But what's your timeline compared to, you don't know the average American's timeline, what they can actually survive. There's people right now who can't survive
400% tomorrow morning, cheese on an airplane to Washington to cut a deal.
I don't totally disagree with that. Do not totally disagree with that. S&P currently holding up 15 minutes into the hour. We got to see how the next couple hours play out here and see if we get a rebound even after this China tariff news. Oh, good. The music is playing. For a second, I thought that the music cut out. Let's turn on Financial Juice.
But the only thing that the prior administration virtually kept intact of the Trump presidency in his first term was his China tariffs. That was literally the only thing that they reaffirmed. Now, when you look at what the president's trying to do, he's doing exactly what he campaigned on. He campaigned on delivering these tariffs. It was no secret about it, so no one should be surprised. He says countries been taking advantage of the United States for a long time, and they have been. I would disagree with my colleagues that you were talking with earlier. They were talking about we should make sure that the European Union is straightened out and we don't address it. The European Union is the reason why we have an agriculture trade deficit in America. We have a $32 billion agriculture trade deficit with the European Union, and we have a $32 billion agriculture deficit in the world. That is unacceptable. But why is that, Joe? Why is that? Honduras purchases more pork from us, a country of 10 million people, than the entire European Union of 450 people. Angola purchases more chicken from us than the entire European Union, and they have a GDP 200% less. 200% less than the European Union. Give me a break.
I DK how I'm going to get used to the markets again when this calms down. Honestly, I'm having a good time. I've been doing, all things considered, really well, trading this volatility. Today, not so much. Wasn't the most optimal day, I'd say. But I still did really well. Didn't lose money. And I made pretty good money over the last week of trading days. So it's been pretty good. I mean, we'll just go back to trading weekly ranges, monthly ranges, get back into using the probability pivots with seasonal data, right? That's what we'll do when things kind of go, quote unquote, back to normal, right? Oh yeah, same here. Had my biggest day ever back to back in this. Only mistake was keeping normal size the first day. Yeah. I'm very happy to hear that for you, Tom. Very, very happy to hear that it's working out for you. Let's see here. And hopefully you guys are enjoying the newsfeed here. Getting a chance to look at what
Samsung
I
and Google Cloud
look
expand
at.
partnership and bring Gemini, Samsung Bally, a home AI companion robot by Samsung.
Yeah. All right, let's see here. Anything else? Some French stuff. The U.S. withdrawal of funding from the fight from HIV/AIDS is a help time bomb. Okay. A lot of French politics going on right now. Rough scenes in small business community this morning. Kira Starmer says, my kids aren't usually interested in my announcements. What did he announce?
Two children, one 16, my boy, and one 14, a girl. They don't take
He's
that
really
much
quiet.
interest in the announcements I'm making every day, I have to admit. But this one has really caught their eye because they can envisage themselves at this theme park like millions of other children.
Talking about a theme park?
Decades to come, coming and enjoying it. So I look forward to being here, seeing this roll out, and then, of course...
Come on, Starmer. Come on. Let's see here. I feel pretty confident saying that if yields on 30-year treasuries stay near 5%, equities have more downside and can crash hard. Yeah, I agree on that. Jeffries upgrades Starbucks to hold from underperform. All right. Let's check out Starbucks. Well, it took a big dip. Yeesh. Starbucks is down 30%. Yeah, it's back to trading around August 2024 levels here. I don't know, man. I still see people going and getting their Starbucks every morning. Unless Starbucks coffee gets significantly more expensive, I really don't think we're going to have an issue with Starbucks. We are now in the MAD phase, mutually assured destruction, to raise the stakes so high both sides would face economic doom if continued with aim to force a resolution. Traders await Fed minutes as U.S. equity futures drop pre-bell. The FOMC is scheduled to release the minutes at 2 p.m. Eastern. Don't think we'll get anything totally unexpected, frankly, from those minutes. Oh, the Aussie's doing well. Oh. Yes. We got a cat here. Hello. You want to make your way across the desk? Yeah, you do. You can't get around the microphone boom? There we go. Oh. Sweet. So that long was a good decision. All right, let's see if that holds up. Wow, Kiwi is killing. It's up 15 pips so far in the hour. Aussie's also up about 14-ish pips on the hour. Pound 15, Euro's up 20. Hey. Okay. We had another crash. Give me 1 sec here to get everything set up. All right, we should have the chat back up now. It wouldn't be a stream without a crash now, would it? All right, post something in the chat. Let me know if everything's good now. Let me go ahead and triple check. Let's see here. Where is the... Oh, did it not remember? Huh. Where is the... I guess I gotta reopen that. All right, let's get the music back up. All right, music is back up. For some reason, the camera stopped working. Give me a sec. All right, can't get the camera to work for some reason. 1 sec. We're gonna bring everything back up. Yeah, you can see camera ain't working at the moment for some reason. I lost connection. Maybe if I deactivate. There we go. Alright. Stream saved. Stream is saved. Kinda annoying that happened, but everything is good now on the stream side of things. Alright, as always, thank you guys for hanging out with me during those rough moments. But yeah, DXY's making new lows. Alright, I can see you, Dakar, in the chat. How is everyone else here? Everyone streams going good? Let's get a little confirmation. Streams up. Let's see here. Yeah, Tone, I see streams freezing on YouTube. I see you. Right. And yeah, everything's going so far so good. Yeah, the Aussie is not rebounding as much as these other assets. Wow, check out that euro. Up 30 pips. Are the equity indices rebounding yet? No. Equity indices are not rebounding off this news. But the dollar is weakening. And look at that yen. The yen just keeps getting stronger and stronger here. Things already moved. How many pips on the day? 194 pips on the day. Wow. Holy nut move. Let's go ahead and bring up gold. Gold pulled back just a hair after it's already been up 2% pretty much on the day. All right. Things look like they are working. Let's get Financial Juice back on. JP Morgan CEO Jamie Dimon says a recession in the United States is now a, quote, likely outcome. Yikes. Let's see here. Any more political news? Maybe some percent updates? No? All right. Later on, if you have some downtime, could you explain the yield spreads to us? What you use to enter your trades? Do you swing trade or scalp? Yeah, Dakar, I get asked that a lot. I trade based on the volatility. So if the volatility is low, I'm more likely to swing. Or if I see something systemic or exogenous coming through, then I'll swing. I mean, during, what was it? August, September, November, I held a trade for like 2 months, short euro dollar. But here, I am taking day trades for the last few days because the environment is very favorable for doing exactly that. Nothing crazy. Oh, now you want to go outside the room? Walks across the desk, puts the tail.
UK 30-year gilt up more than 30 basis points on the day to about 5.649%, the highest since May 1998.
I'm going to put my ears back in. Yeah, I explain it in the trading group, the how to use the indicator, how to use the yield spreads. And there's a ton of examples of trades in the trading group. So if you want to learn how to use the indicators, you can join the trading group. You can try it for free for 10 days, my man. Again, link to that's in the description. So hop in the trading group.
So just with gilt
if you want to
yields
learn how to
spiking,
use
Bank
these
of England
tools.
warnings ring true. Some analyst commentary saying long end gilts are getting pummeled, reflecting a possible surge in margin calls as realize volatility upends portfolio positioning. Just a heads up, US Treasury Secretary Bessent speaking at ABA.
All right, so we're going to be getting some more comments
So
out of
US dollar hits lowest since December 2023 against the Swiss franc, at last down 1.2%. Also, with going back to the bond stuff, then just going here, Japan's Ministry of Finance says Finance Minister Kato held discussion call with Canadian counterpart. Both sides shared concern over US tariff measures.
Wow, check out that
So just
CAD.
going back to the Bank of England and just looking at the gilt yields again. So analyst says the exaggerated moves in gilts relative to other markets, especially treasuries, suggest that there is pronounced stress out there. Earlier Wednesday, the BV said that market functioning has remained orderly, but yields on 30-year gilts have surged 30 basis points just today.
What a move. Wow, Euro's moved up 50 pips so far. It's up 126 on the day. Wow. That was a smart move to hop out of these shorts here. Again, yield spreads aren't everything. Yield spreads make up, roughly 30% of the factor of the thing that pushes FX prices. But when you have stuff like this with China going on,
Besant says it's Main Street's turn now, not Wall Street.
Yeah, when you have stuff
So
like
again,
this China going on,
at the American
you got to
Bankers
pay attention and
Association. We'll see if we can
prioritize
try and find a
this.
video of it and pop it out for you in the feed.
And that relies on you understanding how to interpret those economic events to actually trade them well. So if you don't know how to interpret them, start reading outlooks, start reading commentary, right? That's why I have all this stuff open. And then start coming up with your own theses and ideas, like what I did earlier on in the stream, explaining my thesis from yesterday morning. And then I'm reading guys who are in this head of research list and in this research analyst list repeat what I was theorizing about, which was, hey, there could be a rebound over the next 2 days here if things don't get crazy effectively. Now, a lot of people would say, oh, but this thing with China is already really crazy. And it's like, well, is it crazy enough? Right? And that's why I was watching this position very, very closely, because if it qualified as crazy enough, well, yeah, definitely would end up with the US dollar getting crazy strong. But
Japan
doesn't seem to be the case, at least at the moment.
Agreed to cooperate closely to maintain stability in global markets and financial systems. Again, being cited by Japan's Ministry of Finance there.
Let's see here. Ooh. Investors lose $25 billion in levered ETFs in sector's biggest meltdown. Wow. Let's see here. Will Trump's tariff drive us into a depression? The data, oil markets, and rates. is saying tariffs will do exactly what Trump wants, hurt the rest of the world while sparing the US. And if Trump pulls an art of the deal, we snap back better than ever. So what's this
Will
saying?
Trump's tariffs drive America into a depression? Yesterday I talked about the stock market. Today it's the economy. After a near 10% drop in stocks, are we headed for a depression? In short, interest rates say no depression for America, oil prices say maybe for everybody else, and Trump's art of the deal says it could all snap back better than ever. This past week's red wedding level stock crash was the biggest drop since COVID. Still, for perspective, in February 2018, the Dow dropped 8.5% in 2 days on rising bond yields. In August 2011, it also dropped 8.5% on a downgrade of U.S. debt. I'm guessing most investors don't remember either event because stocks came right back.
Huh. Looks like
Still,
the Chrome
left
music
and globalists
isn't
like the Wall Street
set
Journal
up
are pushing the
correctly.
narrative that tariffs will destroy the U.S. economy. Their favorite
There we go.
comparison is the 1930 Smoot-Hawley Tariff
Now the
Act,
music should
which
be
I
back.
mentioned yesterday is the
Thought I
wrong
already set it up.
comparison, given what else was happening in the Depression. Still, Smoot is generally credited with hurting other countries, and this is a distinct possibility going by the 15% crash in oil prices. Oil generally goes down when global growth goes down. But what about the U.S.? So stock markets are at a surprisingly weak signal, partly because the Dow only includes existing globalized companies. It doesn't include future companies that spring up to make it in America. These globalized companies may be listed in America, but they're not really American. For the Dow Jones, roughly 64% of sales are overseas, while roughly 40% of U.S. imports are by those large companies, meaning almost half of the hundreds of billions paid in tariffs will be paid by those big companies. So yeah, they don't like tariffs. That makes the Dow a global indicator, not a U.S. indicator. To illustrate, roughly 80% of Apple products are made in China. If tariffs force Apple to move production to the U.S., Apple stock goes down because moving is expensive, but it's obviously good for the American economy.
Yeah.
So forget stocks, we have to look at actual recession indicators. The gold standard is interest rate expectations. The reason is because the Fed slashes rates when there's a recession, and that dominates when inflation is low and falling, as it is now. So going to the numbers, Trump's tariffs raised the odds of a U.S. recession this year, but not by much. A month ago, markets were expecting year-end interest rates of 3.6%, which is nowhere near recession levels when rates go to zero. So where are we now after the nuclear tariffs and 4,000 points off the Dow? We're at 3.4. So yes, the odds of recession went up, perhaps from other countries going into recession or revenge tariffs, but they didn't go up by much. So what's next? Brought to you by OnChain.com. Whether these tariffs cause a U.S. recession hinges on how other countries respond and how quickly Trump can bring production home. Zooming out, many countries have done very well with high tariffs. Historically, it's literally how Japan, Korea, and China got rich. In America's golden age, we had tariff rates of 57%, the Dingley Act. Toss in Trump replacing the income tax with tariffs, in part or whole, and tariffs could create far more wealth than Wall Street just lost. Okay, we'll be watching.
All right. Let's see here. All right, still weighed in on the market. Whoa, that is a bright heat map on the FX chart. Wow, yen is so high up. Aussie is doing great, except against the yen. The yen is the big winner here right now. And the dollar is the big loser right now. Dollar is losing against pretty much everything at the moment, especially against the Australian dollar and the euro. Also, the biggest win against the dollar right now is the yen, and then it goes Aussie, euro, Swissy, Kiwi, CAD, then pound. Whoa, Bitcoin's down a little bit here. Let's go ahead and check out what's going on with Bitcoin. Oh yeah, that's right. It's holding up so far after the China tariff announcement, when China set tariffs to 84%. Nothing crazy. The rest of the altcoins seem to be holding up so far on the hour, but we'll see if that continues going forward. Bit of a rebound in oil. Let's go ahead and check out Apple, see how Apple's holding up. All right, well, in about what, an hour-ish from now, 45-ish minutes, we'll have U.S. market open. And we'll see how far this rebound here on Apple will go. Okay. Well, global equity markets seem to be doing okay so far. Again, not every single one. The Japanese, the Nikkei ain't doing so hot still. Their equity market is not doing great. Yeah, that euro is doing killer work. Let's see here. Anything new hitting the swap? Okay. Apollo CEO Mark Rowan says he would not be surprised to see the Fed step in and stabilize. All right, what's this? Greater Treasury regulatory role will take place via Financial Stability Oversight Council. Treasury will look at the capital buffer frameworks for the largest banks to ensure that sizing each large bank's stress capital is consistent within the law. Right?
A global rout in government bonds is starting to sound market alarm bells. US Treasuries have joined equities in selling off this Wednesday as widespread US tariffs take effect. Yields on the 10-year hit 4.49% briefly overnight, dragging borrowing costs higher around the world. Long-dated bonds have been the focus of intense selling from hedge funds, while at the same time the dollar fell against the euro and the yen.
All right, here's Mark Rowan.
I think we needed to reset our trade policy. The U.S. is the second freest trading market in the world financially after Japan, and is the freest trading market in the world considering non-tariff barriers. Why is that written in stone? Why shouldn't we be the 10th or the 20th? The policies that have been in place since the end of World War II are not fit for today. I think we needed to reset our trade policy. The U.S.
All right. Let's go ahead and turn on the SWOC over at Financial Juice. See if any more political commentary hits the wire here. Yeah, ECB Centeno. We will see an economic contraction. Tariffs are a tax and they're a barrier for the economy.
Policy CEO Mark Rowan says that I would not be surprised to see the Fed step in and stabilize.
See, this is why we have X. It's sometimes faster than financial juice. When the BOE tried to defend sterling on Black Wednesday, it hiked rates twice on the same day. The second hike, so totally insane that it triggered a market bounce. Everyone knew the game was up. When/how will we know the game is up? There will be a lot of money to be made. Yeah, generally agree. Yeah. Whenever someone tries to publicly calm things down, it usually means there's actually a problem. Never believe anything until it's been officially denied. Definitely agree with that. Now Squawk's printing all this stuff on Rowan. Oh. Well, back here on the Euro side of things. We'll see how well that holds up. Again, these spreads are pretty negative right now, but
10 minutes away from the top of the hour, expecting the German government press briefing. There isn't a video which has an English translation for it. If we do find one, we'll obviously post it out.
all right. Ooh. Those spreads got pretty negative here on the Euro side of things. How close are we to the end of the hour? 9 minutes? Yeah, it might be too soon to take a shot. On the short side, that is. Just give it a little bit more time until probably after that announcement from the German government.
So Diamond ends his comments on Fox Business.
This is where we really started the conversation. Where does the circuit breaker come from? Could it come from Capitol Hill?
It has to come from Capitol Hill. You have to hear the administration acknowledge what's going on, and you have to have them acknowledge and communicate that they see it, they understand it, and you have to have them start to slow things down. This conversation about a 30-day pause, a 60-day pause, a 90-day pause, something has to happen. You cannot continually walk in and have more tariffs and more stress in the system, because the more you do that, the faster we go to a recession, the faster job losses come, and the faster this gets out of control.
But right now it's just rhetoric. Do you actually see Congress pulling back the reins and trying to take control, giving less authority to the executive branch when it comes to trade policy?
Yeah, Anne-Marie, I think if it continues, you go down that route, but that's a much slower route, right? And the market's going to move much quicker. And this is a question of confidence. Do the markets, do business folks have confidence in the plan, and what's the spill out from the plan? And right now, the markets are saying we're losing confidence, and we're losing confidence quickly.
Gotcha. That was the head of equities, right? Head of equity strategy at Wells Fargo that said that. I wouldn't be surprised to see
Treasury's Besant says that there is little uncertainty, but companies tell me that the economy is very solid. So again, there is a little uncertainty. Besant adding that we're still in a pretty good shape on the economy.
Watching out for any more news here. Yeah, see, that's why we wait. That's why we wait. Dollar still holding up after this dip. Still waiting on the U.S. equity markets to open, but so far, nice little rebound. Let's see if that bullish move over the next 2 days
Besant says the tariff levels are a ceiling if other nations don't retaliate.
Let's see here.
Besant says April 2nd announced tariffs are a ceiling if no retaliation. Besant adding, overwhelmed with nations wanting to come to DC to negotiate. We have 70 negotiations lined up.
China holding the peg now, withholding purchases is a neat way of obscuring the fact that defending the peg is likely draining US dollar reserves. Ooh, so China is...
And Besant saying, I will take a lead in negotiating roles with tariffs. So again, I will take a lead negotiating the negotiating role with tariffs. China is the only nation that's escalated on trade.
Wow. China being the only one is somewhat telling. Oh, King Charles addresses the Italian Parliament.
Besant says Europe would cut their own throat by aligning with China. So specifically saying Spain comment about aligning more with China would be cutting your own throat. And Besant sees deal with allies, then can approach China as a group. At the end of the day, we can probably reach a deal with our allies.
So this is King Charles addressing Italian Parliament.
Federal government's position, my position is people should get the measles vaccine, but the government should not be mandating.
Understand,
You know,
but
I've always said during my campaign and every part, every public statement I've made, I'm not going to take people's vaccines away from them. What I'm going to do is make sure that we have good science so that people can make an informed choice. And we are doing that science today so that we know the risks of that product.
Besant
And we also
says
know what the
discussions on tax bill are going better than expected.
Well, things are pretty chill right now.
Essen says that we want to deleverage the government sector and re-leverage the private sector.
I don't know when they're going to start speaking. We can just watch the squawk. See if anything interesting comes out of it. Let's see. Best at the end of the day, we can probably reach a deal with our allies. Then we can approach China as a group. It compares China's economy to the brooms carrying buckets of water in Disney's Fantasia. Oh my god. Oh yeah, the peasants quote. Remember that? They keep producing and producing and dumping and dumping.
Also, a reminder, about a couple of minutes to go until we're expecting the German government press briefing. Besson says we're hopefully going to bring down debt to GDP by 1% every year. Traders now see more than 60% chance that the Fed will start interest rate cuts in May.
Man, stream's now been going on for 2 hours. Busy day.
Trump says it's imperative Republicans in House pass tax bill. So just putting out his Truth Social here, says it's imperative that Republicans in the House pass the tax cut bill now. Our country will boom. Besson says we're going to make loan interest for American cars tax deductible. Effective Fed funds rate unchanged at 4.33%.
Very good. The Aussie trade's doing well. Baiting the China news was the good thing to do, at least for this particular asset. All right. Let's see how much this makes now. Over the next couple of streams. Maybe that's something we can swing if that lower volatility assessment realizes itself.
It's Kashkari coming through with comments now.
Right.
Kashkari says bar for rate cuts is higher even facing weaker economy. So again, bar for rate cuts higher even if facing weaker economy. Policies tightening on its own and reduces need to hike. A near-term neutral rate will likely fall amid tariffs. A risk of unanchoring inflation expectations notably risen. Hurdle to adjusting rates higher now due to tariffs. Inflation rise will, at least in the near term, due to tariffs. We could revise outlook if uncertainty rapidly resolves. Sharper than expected downturn may prompt new outlook. So saying hurdle to changing policy rate has increased due to tariffs. No monetary policy response up or down should be off the table. Risk of unanchoring inflation expectations seems to have increased notably. So again, falling neutral rate due to tariffs reduces immediate need for rate hike. First priority must be keeping long-run inflation expectations anchored. Too risky to look through inflation effects of tariffs. Near-term inflation will climb, purchasing power will go down, investments will likely be lower, GDP will be smaller due to tariffs. Kashkari says announced tariffs much higher, broader than expected, resulting in a larger economic effect and shock to confidence. Once confident on inflation expectations, could then focus on trade-offs between goals. EU adopts tariffs of 21 billion euros of US goods in metals dispute. So again, EU adopts tariffs on 21 billion euros of US goods in metals dispute. Well, ECB says forex reserves fell to about 8.3 billion euros to about 338 billion euros. Gold and gold receivables rose 130 billion euros in week.
Okay. Yep, Euro climbing back up.
From Germany now, further German coalition agrees on rejecting asylum seekers at land borders in coordination with neighboring countries. Further German government coalition says it will end all federal admissions program for refugees, not establish new programs.
Oh.
Coalition says it will suspend family reunification for people with subsidiary protection status for 2 years.
All right, some immigration policy out of Europe.
So coalition agrees to abolish gas storage surcharge and agrees to introduce new electric vehicles purchase incentives. They're to agree to introduce incentives to build up to 20 gigawatts of gas power plant capacity by 2030.
And new tariffs from the EU. $21 billion of goods in metals.
Coalition government
Not the
aims
biggest
for
deal in the world,
medium-term free
21
trade
billion.
agreement with the US, a reduction in import tariffs on both sides of the Atlantic, according to a document. Also, to create expert commission on debt brake modernization, wants to finish legislation by the end of 2025. German coalition partners say they want to boost industrial investment with digressive write-downs of 30% in 2025, 2026, and 2027, according to a document. And partners agree permanent stationing of German soldiers in Lithuania central to defense of NATO eastern flank. Coalition says government plans to cut corporation tax by 1% a year for 5 years from 2028. Also, they plan budget consolidation, including cuts to voluntary funding for international organizations. Also seeing here, according to UAE State News Agency, US Energy Secretary writes, as we will discuss on a visit to UAE, supporting announced investments into the US and enhancing global energy security.
Yeah, those spreads are still super negative. Well, we got the open of a new hour here. What we got 30 minutes. Yeah, roughly 25-ish minutes till US market open. How's it doing so far? Oh, man. US markets are doing well. We're almost back to yesterday's close.
At the ABA event in Washington.
All right. Pre-market is pretty much flat on Apple. Same thing with Amazon. Amazon's doing even a little better. And Nvidia is actually above yesterday's close. It is yesterday's close, right? That's what that's supposed to be, that line. It's looking pretty good now for equities. So fading that China tariff. Very, very, very good trade.
So EU Commission says it will impose first countermeasures against US tariffs on April 15th. And it secures backing from EU nations for first countermeasures against the US.
Okay.
Seeing NASDAQ 100 features turning positive.
Turning positive. Well, I don't have too much more to add today. I'm smiling because I'm making good money again. I'm I'm sitting pretty. Sitting pretty. Sitting pretty. I would have been sitting even prettier if I exited this trade way down here. You know? You don't always have things line up perfectly all the time.
EU Commission says countermeasures can be suspended at any time should the US agree to a fair and balanced negotiated outcome.
Yep. So EU's open for negotiations. German coalition government aims for a medium-term free trade agreement with US. A reduction in import tariffs on both sides of the Atlantic, says the document. German coalition partners want to boost industrial investment with digressive
Germany's
rate
Conservative leader Merz speaking to reporters in Berlin, saying coalition agreement is a strong plan to advance Germany.
Coalition of partners agree relations with US of utmost importance. Transatlantic success story must also continue under new conditions. Okay, that's actually incredibly positive. Euro should be probably rising off that news, no? Because that's going to implicitly increase the likelihood of a trade deal with Europe, no? Pretty good trading, man. Let's go ahead and save that take profit price. Set that to winner. And go back here and paste. Extend that down a bit. There we go. Alright, so far so good. We'll see if this is something that's swingable, if the volatility stays low over the next couple of days, like that theory suggests. And Aussie has a bit more to recover compared to other assets, if that is the case. Same thing with New Zealand, I'd say. Canada's gonna struggle. Their economy ain't so hot. And look at Japan. Japan's just killing it right now. And the 1 hour yield spreads, short term, turning positive. Intermediate hasn't turned positive quite yet. Probably sometime by Thursday, yield spreads on the 1 hour will be more positive. Actually, no, that'd be around Wednesday. Sometime around... yeah, like a few hours before London. Like 4 to 6 hours before London. Maybe the daily, intraday yield spreads move more positive.
Germany's 10-year bond yield steady after EU countries back first countermeasures to US tariffs from April 15th, last down 2.3 base points at around 2.601%. The German
steady.
coalition, it's just being reiterated here by another major newswire. German coalition to cut corporate tax in 5 1-point steps.
they plan to cut the corporate tax in 3 years. What the heck is... What is that? The guy with a cowboy with a surfboard on a horse on the beach. The U.S. economy is already in poor shape due to the U.S. money supply contraction since July 2022. To add fuel to the fire, Trump's tariffs are the worst economic policy you've had in 100 years. Debate with University of Chicago professor Thomas
Mertz says Trump has unleashed new turbulence in financial markets, but we don't know where that leads.
States is.
Where do you think the US economy will be in 6 months' time?
It'll be in the tank. And it'll be in the tank for two reasons. One has nothing to do with Trump whatsoever, and that is
There's further
monetary
reason here
policy.
from German coalition failing to agree on possible reactivation on some nuclear power plants.
Ah, come on. Come on. Get with the program already. Turn on the nukes. If the word nuke could be rebranded to mean nuclear power plant instead of nuclear weapon, I think that'd be great rebranding for the word nuke. So instead of, turn on the nukes, turn on the nuclear power plants. But you know what? It's been in common language or using the word nukes, or weapons for so long. I don't think that'd be really successful. But man, that'd be great rebranding.
Mertz says that we will have border controls.
All right. Good job. I don't have too much more to add now. Stream's been going for a good while. Looks like the U.S. equities market is going to be opening. Okay. We'll see how things trade for the rest of the day. And the China stuff isn't gonna probably fare too well for all these companies that have China exposure. But net, things are not at least blowing up here on the FX space. Dollar is getting weaker. Oh, dollar actually had a little bit of a rebound here, but is that mostly euro? Yeah, that's just mostly euro. Commodities holding up. We'll probably stick around 30.50 for a good bet here, probably.
Germany's Chancellor designate Mertz says we will create a National Security Council in my office and a National Crisis Council.
Gotcha. And oil having a nice little rebound here as well. Bitcoin had a nice rebound too. It's close. It's so far green on the day. But these altcoins kind of struggling. Technically, Bitcoin is a bit too right now, but of them all, Litecoin's actually up 2%. That's interesting. But of the ones that are in the U.S. Strategic Reserve, crypto reserve, Bitcoin's performing the best at the moment. Alrighty, you guys. So, thank you for watching the stream. Of course, if you've watched a 2-hour stream, you've already liked and subscribed. And I'll be hanging out in the Discord. I'll be hanging out in the voice chat. Been hanging out in the voice chats pretty frequently now. And I'm now starting to get tired. I'm going to go get my rest, relax a bit, get a bite to eat, and see how these trades hold up, especially that Aussie trade. Very, very nice. Very good trading recently. Very good trading recently on my end. And with that all said, I will see you all in a bit.